So, reviews. Much less in scope than an audit. The accountant is given limited assurance. They're governed by SSARSs. However, the accountant has to be independent to perform review services. So the accountant is giving limited assurance. Now, let's turn to your textbook. On page 800, figure 25-1. Figure 25-1, compare the three levels of services. In an audit, the accountant is giving a high level of services, and the amount of evidence they gather is extensive. In a review, they're giving limited assurance, and the amount of evidence they gather is significant. In a compilation, they're given no assurance, and the amount of evidence is minimal. Basically, they're taking the client information and put it in the form of a financial statement. Now, reviews and compilations, you're generally perform these for your smaller clients. Or sometime on the review, if you're doing the annual financial statement, you're doing an audit of the annual financial statement, you may do a review of the interim financial statement for public companies. Because public companies are required to file an annual report, Form 10K, as well as they're required to file quarterly report, Form 10Q. And the financial statements that are required by Form 10Q need not be audited. So most of the time you will issue a review opinion on the financial statements on the quarterly information that is included in the Form 10Q. Procedures that are, let me just share my screen so I could go to my notes. So procedures that are suggested for review are discussed on page 801. But before I start diving into the chapter, let's look at some of the things we're going to learn in chapter 25. One, we'll understand the level of assurance and evidence required for reviews and compilations. Two, we'll describe special engagement to review interim financial statement for public company. Three, we'll distinguish the AICP attestation standards from auditing standards and know the type of engagement to which they apply. Four, we'll understand the nature of web trust and site trust assurance services. Today, companies are making extensive use of computer systems. Almost every company out there have a website, even the small company. Almost every company have their accounting system on a computer. So when we're talking about web trust, we're talking about the client website, and we're giving some assurance as to the website. When we talk about site trust, we're giving some information regarding the client data processing system or their accounting system, among others. Five, we'll describe engagement to report on internal control at service organizations. Six, we'll understand special engagement to attest to prospective financial statement. We talk about prospective financial statement, we're talking about forecast and projection. We're looking into the future. What are the accounting responsibility when they are presenting projections? 7, we're going to define agreed upon procedure engagement. What are they? And how do we do them? 8, we'll describe other audits and limited assurance engagement related to historical financial statement. This entire chapter can be a graduate study course, because each of these things that we're going to talk about, you're not expected to master. I expect you to know what a review is and what a compilation is. The other items we can talk about, we're not going to go in depth, but I'd like you to understand what they are. So in the future, if you need to do one of those, you know where to go and find the answer. And you know what to look up and where to start up. Understand the level of assurance and evidence required for reviews and compilations. As I mentioned before, the standards for compilation and reviews of financial statement are called Statement of Standards for Accounting and Review Services, SSARS. And the SSARS are being sponsored by the Accounting and Review Service Committee of the AICPA. They're the ones that determine these standards. Excuse me for a minute. Now I'm teaching. Now I'm teaching. I'm going to say hello, and you're going to go back to your. Okay, say hi, raise your hand, blow them a kiss. You can't see them. Or give me a kiss now. Give me a kiss now. Okay,
she's so cute, Professor.
Thank you. You're gonna go back and do what you have to. Go ahead. Go with mommy. Okay, go with mommy. You're missing the place. Yeah, that's my only grandbaby. She's gonna see me every hour on the hour. I know what she's gonna do when I go back to New York. Okay, back to where we were. So review and compilation services are conducted by SSARS, and those are the standards by which we conduct these services. We talked earlier about the relationship between evidence accumulation and assurance attained. This is on page 800, figure 25-1. So an audit is a high level of service. A review, you could say, is like a mediocre level of service, and the compilation is a low level of service. A review service, SSARS review engagement, is designed to allow the accountant to express limited assurance, I mentioned that before, that the financial statements are in accordance with applicable accounting standards. Applicable accounting standards in our cases, GAAP, generally accepted accounting principles. Procedures suggested for reviews. What are some of the things we do in the review? And these are on page 801. We'll obtain industry knowledge. We'll know the client. We'll make inquiry of the client management. We'll perform some analytical review procedures. In chapter 7, we are going to talk about what an analytical review procedure is or what they are. We'll obtain a representation letter, and we'll prepare documentation to document the work we do. In any company we are associated with, we want to understand the industry and we want to know the client. In any type of work that we do for a client, we want to document what we do. If we're doing tax work, we want to document what we're doing. If we're doing compilations, review, or audits, we want to document it. Any types of engagement you're dealing with a client, you want to document what you did. Okay. So any level of services we're going to talk about in the accounting profession, there will be documentation. So documentation is required. And then we have the review report. The review report has 4 paragraphs. It is on your text on page 803. Now, notice the very top of the report, it says independent accountant review report. So when you're doing a review, you must be independent. Like an audit, when you're performing an audit, you must be independent. When you're performing a review service, you must be independent. Shortly, when we talk about compilations, you will see that you need not have to be independent when you're doing a compilation. Okay? So the review report, and I'll read the report. We have reviewed the accompanying financial statement of Archer Technologies, Inc., which comprised of the balance sheet as of December 31st, 2016, and the related statement of income, changes in stockholder equity, cash flows for the years that ended. So we identify the financial statements that we are reviewing, and the related notes to the financial statement. A review includes preliminary applying analytical procedures to management financial data and making inquiries of a company management. A review is substantially less in scope than an audit, the objective of which is the expression of opinion regarding the financial statement as a whole. Accordingly, we do not express such an opinion. So the very first paragraph, we identify the financial statement. We identify the fact that we are doing a review. We're telling the client that the review is much less in scope than an audit, and that we are giving limited assurance. We are telling the client right up front, this is not an audit. This is less than an audit. We do not want anybody to mistake this for an audit. Second paragraph, we get an outline management responsibility. Management is responsible for the presentation and for the preparation of fair presentation of these financial statements in accordance with accounting principles generally accepted in the United States of America. This includes the design, implementation, and maintenance of internal control relevant to the preparation and fair presentation of financial statements that are free of material misstatement, whether due to fraud or error. So like an audit, in a review, we are saying that the financial statements are free of material misstatement. So there could be misstatement, but those misstatements would not influence the user decision. The next paragraph, we're going to tell the reader of the accountant responsibility. Our responsibility is to conduct the review engagement in accordance with statement of standards for accounting and review services promulgated by the Accounting and Review Service Committee of the AICPA. Those standards require us to perform procedures to obtain limited assurance, underline that term, limited assurance, as a basis for reporting whether we are aware of any material modification that should be made to the financial statement for them to be in conformity in accordance with accounting principles generally accepted in the United States of America. We believe that the results of our procedure provide a reasonable basis for our conclusion. And the last paragraph, we'll express our conclusion. Based on the review, we are not aware of any material modification. You want to highlight that term. We are not aware of any material modification. Meaning we're saying we see nothing wrong with the findings. We're not saying that they're correct. We're saying that we did not see nothing wrong based on our review. That should be made to the accounting financial statement in order for them to be in accordance with accounting principles generally accepted in the United States of America. So we're saying that based on our review, nothing came to our attention that these financial statements need to be modified. Okay. So again, review, the accountants have to be independent. They're giving limited assurance. They're providing some limited procedures that we talked about and that are listed in page 801, and it is much less in scope than an audit. When we're doing a review, we have to give a full set of financial statements that is prepared in accordance with GAAP. Compilation services. Compilation services are where the accountant have a lot of leeway in what they could do. In the compilation services, basically we're taking the client information and put it in the form of financial statement. So it is defining SSARs as one of which accountant present to a client or third party financial statement that the accountant has prepared. The CPA firm does not express any assurance on the statement. So in the compilation, we are giving no assurance. In the compilation, we may or may not be independent. If we're not independent, we need to stay so in the report. We can have a one-line report that says we are not independent with regards to these financial statements. Whereas in reviews and audits, we must be independent. Requirements for compilation. On page 804, we talk about the requirements for compilation. We have to document the service to be performed and a description of the report. We must know the client industry, accounting principles of practice. We must know the client. We should determine whether the client information is satisfactory. We should review the compiled financial statement for any obvious omissions or errors in math and GAAP. So we want to make sure it's mathematically accurate and there's no violation of GAAP. We can perform a compilation with full disclosure, no disclosure, or we could perform a compilation without independence. Full disclosure, all the footnotes that are required by GAAP should be present. No disclosure, we could omit all the footnotes, but we must say so in the report that we are omitting all the footnotes. Or we need not have to be independent, but we must say in the report that we are not independent. We will perform a compilation on a full set of financial statements or just one financial statement. We can't do this for an audit or review, but we could do that for a compilation. We could just perform a compilation on income statement. Now, why this is so? For very small businesses, that you need a small loan from the bank for whatever purpose, maybe the owner want to buy a house, they're getting a mortgage. The bank wants to determine if they should qualify for the mortgage. So the bank would like to know what their income are. Since they're sole proprietor or LLC, and they don't take any payroll, their income will be the net income of the business. So the bank really wants to know the net income of the business. So basically, the banker generally requires, they don't require, but if a piece of information they want to know is the income statement. Now, the bank will not tell you that they require that. They will tell you that they, a lot of times when my small client called me and they're getting a loan, they said the bank needs an audit. And that's what your client is going to tell you. Hey, my bank needs an audit. I'm buying a house, I'm getting a loan. I'm going to say, no, I don't think your bank needs an audit. And the client said, oh, that's what they told me. They said I need an audit. I'll take the bank information. Who's the person you talk to the bank? And I'll call them. And I'll explain to them the difference between an audit, a review, and a compilation. And based on the loan amount, majority of the time, we go with a compilation. And I would sometimes tell the person, hey, call your underwriting department. Tell them you talk to me, give them my number, I'm a CPA. And that I'm saying that you need a compilation for this $500,000 loan. And almost all the time, that suffices. And I do a compilation, the lowest level of service. Not because the client says they need an audit, you're going to go and do an audit. It's an audit, you're going to charge the client a lot for an audit. You as the accountant, you as the CPA, have to work in the best interest of your client, not your best interest, but the best interest of your client. And if you do that, you're going to always be in business. And your client will have a lot of faith in you because you are working for them unselfishly. You will develop this rapport with your client that they will tell you things that they don't tell anybody else. Occasionally, my client will call and they want to discuss certain things with me. I need to get on the phone and talk to them, not put them off. Sometimes I'll tell my wife or my daughter, ask them if they want to talk to me or you could answer their questions. Sometimes they insist they need to talk to me. And being an accountant and you're servicing your client, you need to get on the phone and talk to them. You know, let me divert for a minute because I want to share this piece of information with you. In today's economy, there's a lot of fraud that are going on. In the old days, in Guyana, we used to say they choke and rob you. They choke you and they rob you. Today, choke and rob is out of fashion. Today, most of the crime are committed through the computer, high tech. If somebody gets your personal information, they can steal your identity. So you need to protect it. And one of the fraud that is going on right now is they're going to call you, tell you that they're from the IRS and you owe money and they're going to take you to jail unless you pay them X amount of dollars. Or they're from the sheriff office and they'll do the same thing unless you pay them X amount of dollars. All these things are fraud. My dad is 85 years old. They called him and they said, they're from the IRS and he owes money. My father was frantic. He called me. I said, Dad, don't worry about them. They're trying to defraud you. Wait until I come home. Not only old folks, young folks are believing in this because these people are so convincing. They've been calling my wife. They want to take her to jail. So now when they call, my wife says, you know, you're calling me every week and promising me that you'll take me to jail. I'm waiting for you. What happened? And the girl on the other side of the phone is laughing because they know it's a game. In the old days, you lock up your safe. Today, you lock up your personal information. Do not share your date of birth with anyone. Do not share your social security number with anyone. Today, we all got a cell phone. And we like to charge your cell phone at public places. When you charge your cell phone at public places, these people could steal your data. They could get into your phone and know everything that goes on in your phone. And we do a lot of things on our phone today. If you're my wife, all your business transactions are done there. Check your bank account, move money from one account to the other. The phone, the cell phone, is not only a phone today, it's a tool. You go on the internet, you serve the internet, you do your banking, you do all kinds of things on it. It is important that you protect your data. As a practicing accountant, it is important that I protect not only my data, but my client data. Because everybody tax return that we do, we got your name, address, social security number, date of birth, right? All the information you need to open a credit card account. So it's important that they trust us with that information. It is important that we do not betray their trust as an accountant, that we keep that information secure. Likewise, you guys, as aspiring accountants, when you become accountant, you're going to have to do that. Do not betray the trust of your client. Betraying anybody's trust is very easy. To regain trust, is very hard, and it takes a process, and it takes time. I got a client I've been dealing with for 30 years now. Nice guy, we become friends. And when the government was giving out PPP money, I called him if he could get some free money. He was very skeptical. I said, look, he did about 30 applications. He was not one of them. We did it halfway and he said to cancel it. And then 2 months later, he's calling me and telling me to have cash flow problem. I said, this is what I was trying to avoid for you. So although he's been my client for 30 years, he do not trust me 100% because he's that type of guy. He's older now. And as you get older, you get very scary because a couple of people have defrauded him. Right? I was kind of a little mad at him. I said to him, I know you for 30 years. Have I ever led you astray? Trust me on this one. Now, when it's finished, one day he called me, oh, I saw it on the news. Can we still get our money? I said, no, it's too late now. So it is important as accountants, we are in a very confidential relationship with our client. We want to maintain that relationship as long as we are servicing the client. Okay? As long as we are servicing the client, we want to maintain that confidential relationship. So back to our topic at hand. Compilations, we could do with full disclosure, we could do with no disclosure, and we could also perform compilation even though we are not independent, but we must say so in the report that we are not independent with regards to the financial statement. Your compilation report. Figure 25-3 on the top of page 805. But basically we have 3 paragraphs. The first one, we are telling the reader what we do, and that we do not express an opinion or provide any form of assurance. We're saying we have compiled the accompanying balance sheet of Williams Company as of December 31st, 2013, and the related statements of income, retained earnings, cash flow for the year then ended. We have not audited nor reviewed the accompanying financial statement and accordingly do not express an opinion or provide any assurance that the financial statement are in accordance with accounting principles generally accepted in the United States of America. In the second paragraph, we are telling the reader that management is responsible for the financial statement. Management is responsible for the preparation and fair presentation of the financial statement in accordance with accounting principles generally accepted in the United States of America, and for designing, implementing, and maintaining internal control relevant to the preparation and fair presentation of financial statement. So it is not our financial statement, it is management. Third paragraph, we tell them our responsibility. Our responsibility is to conduct the compilation in accordance with a statement of standards for accounting and review services issued by the American Institute of Certified Public Accountants. The objective of a compilation is to assist management in the presenting financial information in the form of financial statement without undertaking to obtain or provide any assurance that there are no material modifications that should be made to the financial statement. So we are not providing any assurance on these financial statements. And generally compilations you're going to be performing for smaller companies. Both reviews and compilations you're going to be performing for smaller companies. Larger companies will definitely have an audit. If you're omitting the footnotes, you should have a paragraph there saying that we are omitting the footnotes, and that was figure 25-4. It's saying that management has elected to omit substantially all the disclosure ordinary including financial statement, etc., etc. I'm not going to read it through, but you will. Special engagement to review interim financial information of public companies. Again, this is going to be done on the quarterly financial statement. We may do a review. The annual financial statement, we have to do an audit. So we cannot get a review on the annual, but the quarterly we may do an review engagement. The SEC requires quarterly financial statement to be reviewed by the accountant external auditor prior to the company filing of its Form 10Q. 10Q is the quarterly report that the public company files with the SEC. Like reviews under SSARS, a public company interim reviews include the 5 requirements for review services. Like reviews on the SSARS, a review for a public company does not provide a basis for expressing a positive form of opinion. The review is conducted in accordance to the standard of the PCAOB, and there are no reference to the SSARS in the review report. Now, these standards we are not going to learn in this course, but if we are doing a course on SEC accounting, which you may do in a graduate accounting class, then we're going to talk about some of this. Distinguish AICPA attestation standards from auditing standards and know the type of engagement to which they apply. When we're doing auditing, we're looking at financial statement. Now, when we are attesting to financial statement, we have to have a full set of financial statements. Attestation standards, we are attesting to something, but we are not necessarily maybe looking at financial statement or a full set of financial statement. So we have the attestation standard, the type of engagement that is applied to, and the level of service that we are giving. Now, the generally accepted attestation standard are on page 808, table 25-1. There are 5 general standards, there are 2 standards of fieldwork, and there are 4 standards of reporting. For the purpose of this class, I don't want you to study this and know it in depth. I just want you to know that they're there. You're not going to be tested on what I'm talking about in here. The stuff that are important in chapter 25 are reviews and compilations, and side trusts and web trusts, which we're going to talk about shortly. Okay. The other stuff we're going to just go through for you to know that there's such a service. And if for some reason in your career you need to do it, you know where to find the answers. So in an attestation service, you could do an examination, which is extensive like an audit. You could do a review, which is significant like a review, or you could do an agreed upon procedure, which may be varied depending on the procedure. We're not going to get into detail with that. But 4 is what I want you to know. Understand the nature of web trust and site trust. What is web trust? Web trust, we are looking at the client website to make sure that it adheres to certain principles of developing websites. Site trust, we are looking at the client computerized system to see that it adheres to certain principles. So web trust attestation engagement, a client engages CPA to provide reasonable assurance that the company website complies with certain trust services principles and criteria for one or more aspects of e-commerce activity. That's all I need to know you to know about a web trust. Okay. Site trust. In a site trust engagement, the site trust licensee evaluates a company computer system using trust services principles and criteria. The service provides assurance to management directors and third parties about the reliability of information system used to generate real-time information. That's all I need you to know about site trust services. And compilation and reviews, and this part is what I need you to know in this chapter. The rest are just food for thoughts, just for you to know that they're there. That if sometime in your career you need them, you know where to find them. Number 5, engagement to report on internal control of a service at service organization. It's a service organization. ADP is a service organization. They do your payroll for you. If you're sending out your information to be processing externally, you want to make sure that that organization has certain internal controls in place to protect your data. Because when you're sending out your payroll, you're sending out the name and addresses of every employee and executive in your organization. You're sending out the name, addresses, phone number, social security number, and date of birth. If those information are stolen, it could be chaos to them and to your organization. So you want to make sure that whatever organization is processing your payroll, they have good internal control. So you can ask for their internal control service report, which is provided by their CPA. So some CPA will examine ADP and give a report on their internal control. These are historical report as SAS safety engagement. There are 2 types of report. Type 1 report on the design of the control. Type 2 report on the operating effectiveness of the control. You're more concerned in the type 2 report, which is the operating effectiveness. Are their operation controls effective? Special engagement to attest the prospective financial statement. Prospective financial statements are basically forecasts and projection. So their forecasts and projections, the use of prospective financial statements, and the types of engagement. We're not going to deal with this in depth, but occasionally we are called upon as accountants to provide forecasts and projection, especially if companies trying to raise finances, or they're a startup company, or they are looking to sell their securities in the public. We need certain forecasts and projections of what their income is going to look like. There are some responsibilities governing those. The accountant should evaluate the preparation of the prospective financial statement. They should evaluate the support of underlying assumptions. When we're preparing forecasts, we are preparing to give us certain underlying assumptions. Are those assumptions reasonable? The accountant should evaluate the presentation of for conformity with the ICPA guidelines. So the heuristic financial statement must be prepared in accordance with the ICPA guideline, and the issuing of an examination report that we have examined those. Now I'm going through these quickly. I just don't want you to know that these level of services are available. You don't need to know them for the purpose of this class of the exam. Topic 7, agreed upon procedure engagement. Basically, you and the client agreed on certain procedures to be performed. Give you an example. LeBron James is a celebrity. He's not only a basketball player, but a substantial part of his income is coming from endorsement. He's endorsing various different products, including Nike sneakers. And he's getting royalties based on how much of that product sells. So let's say, for argument's sake, LeBron James is getting $5 for every Nike sneaker that's sold. Well, First of all, let's think about this. Why does the company ask LeBron James to endorse the sneakers? Why don't they ask me, Professor Barose? I'm much more educated than LeBron James, probably much more smarter than him. But if you ask a 16-year-old or a 14-year-old or a 15-year-old what sneakers they want to buy, they don't want to buy a sneaker that Professor Barose endorsed or some engineering company that knows about sneaker enjoy. They want a LeBron James sneakers. They want to fly high like LeBron. So by LeBron putting his name to the sneaker, it could be a piece of garbage, but it's going to sell for a lot of money. If anybody is familiar with sneakers, Michael Jordan, the high-flying Michael Jordan, his sneakers is still in the over $100 for a pair. They're still as expensive as LeBron James or even more. Does it mean that it's better than the other ones? Not necessarily. But we all like to wear what's in fashion. LeBron James is in fashion. We all like to wear outfit of our favorite sport team, and we all, including myself. I have a ton of Magic memorabilia and outfits. Also the Giants, a bunch of them. Because that is what's popular. Does it mean that it's better than the rest? Not necessarily. But that is what the public demands, that is what the public wants, and that's what the Nike and everybody else is going to give us, what we want. So they're going to give us the LeBron James sneaker, but they're going to charge $100 and something for it. However, they have to get LeBron James to endorse that sneaker. So to do that, they will give him a royalty out of it. That's why basketball players and sports players get millions of dollars just to endorse product. Do commercials. That's a big part of their revenue also. Now, LeBron James wants to know if Nike is paying him his fair share of royalty. So he will hire an accountant, and all he wants the accountant to look at how much LeBron James sneakers they sold, and they pay him his fair share of royalty. That's an agreed upon procedure. We don't want to look at all of Nike. No, just look at the revenue derived from LeBron James sneakers, and did they pay him his fair share of royalty. So that's the agreed upon procedure. Today, sport is a big business. There's a lot of money to be made in sports. Players are getting paid billions of dollars, millions of dollars, and they're still complaining, just like everybody else, right? And the last part of what we're going to talk about are other audits and limited assurance engagement related to historic financial statements. Financial statement prepared on other comprehensive basis of accounting. Cash or modified cash basis. Financial statement prepared on the basis of cash receipts and disbursement. This is not GAAP. Tax basis, again, that is not GAAP. Regulatory agency basis. You have all kind of regulatory agency. You have the mortgage broker, financial statements required by HUD. You have the rental apartment financial statement required by HUD. You have the broker-dealer financial statements that are required by the SEC, and they have a little different basis of accounting than traditional GAAP. And then there may be financial statements that have to be prepared by a defined set of criteria other than GAAP. For whatever basis we are preparing these financial statements, we must disclose those bases. Sometimes we are just audited specific elements of the financial statement. For example, LeBron James hires us just to audit revenues derived from LeBron James sneakers by Nike, right? Just a specific element, not the whole financial statement. There are two differences in these types of audit because your materiality is defined only by the item you're auditing, and GAS 4 standard does not apply. Sometimes we are asked to do debt compliance letter and similar reports, which we will do. But I don't want you to know all of these. And these are generally, we are giving that negative assurance, like compilation, nothing come, like review, nothing come to our attention that anything need to be modified. And this completes what we have to talk about in chapter 25. So let me just stop sharing.